Hey guys, welcome back to my channel, and this is a trade breakdown for today, Thursday, the 2nd of October. Guys, as you know, to get our bias, we normally go to the 1 hour, the daily and the 4-hour chart. So this right here is the 4-hour chart for NQ and ES. As you guys know, we delivered to internal liquidity right here on the daily chart, traded into this daily FVG, and now we have completed the external liquidity. We have taken these equal highs on both ES and NQ. So we were here today. We have just taken the external liquidity on the daily charts. So guys, to my bias today, the way I get my bias, I was bearish for a while. I was half bearish and half bullish, and I will let you guys know why I was half bearish and half bullish on the day based on the 4-hour time frame. So guys, as we jump down to the 4-hour time frame, what do we have here on the 4-hour time frame? We have this breaker here with this low, high, lower low, and with this place up. We have the same on ES, low, high. We have this low right here, high, we have low, high right here, lower low, this place up. We have this low, high, lower low, this place up. And we did this on the 4-hour time frame. And what we did, we leave two fair value gap stack on top of each other, breaking the highs. So whenever we have the two fair value gaps stack on top of each other, breaking a high, it could be on whatever time frame. Guys, this one should stay open. This should stay open. Price should trade to this and go to the highs and trade to the highs. So when we came into the market this morning, we were above here. So I was bearish until we trade to this 4-hour fair value gap right here. I was bearish until we trade to this 4-hour fair value gap right here. I labeled this as a breakaway gap, this fair value gap as a breakaway gap, because I didn't want to see price trade to this. I wanted to see this fair value gap stay open. So that's why I was bearish in the beginning of the session. I wanted to see price trade down to this fair value gap and then trade back to the highs. Okay, so that's my analysis on the 4-hour time frame. So we'll get back to this on the 5-minute in a while. So let's go to the charts. So guys, as you already know, we begin our day by marking out the highs and lows between 7 o'clock and 8:30 a.m. So this was the low on NQ, the highs on NQ. And after we do that, we mark out the open, the 8:30 open, which was here, and the 12 o'clock midnight open, which was here. So we have 8:30 open here and 12 o'clock open here. We do the same on ES. We had mark out our lows and highs between 7 a.m. and 8:30. This was the lowest low, and this was the highs right here. So after we mark that out, we mark out our two opens, our midnight open and our 8:30 open. So guys, when market open at 8:30, at 9:30, the 9:30 bell, where were we? We were above the both open, and if we were above the both open, that put us in a deep premium. Price is expensive. What do we have again? We open here. This is RTH hours, regular trading hours. We have the gap from yesterday close from 459 yesterday, and we open at 9:30 here. There was a gap to the downside, so we are looking for price to fill this gap. We are in a deep premium. We are above the both open, the 8:30 and the 12 o'clock midnight open. So we are in a deep premium. What are we looking for price to do? We are looking for price to trade down to fill the gap and to move towards the 12 o'clock midnight open. We're in a deep premium, as I tell you guys. We are in a deep premium. A deep premium. We're looking for price to move to discount, which is 12 o'clock open and fill the gap. What did we also have? We had the forward gap that I show you guys. The forward gap. Here it is right here. The forward gap. We were looking for price to trade to it. This is the forward gap right here. We were looking for price to trade to this forward gap right here. So that's why we were bearish at the open and bullish to continue the session. So guys, when price open, we already we had already taken the highs, the marked out highs. When we took the marked out highs, what is remaining to be taken? The lows. You have the lows from 7:30 to from 7 o'clock to 8:30. So price what move towards the 7 o'clock to the 8:30 open to fill the gap and the 12 o'clock open. Plus we have the FVG, the forward FVG here, that needed to be traded to. So you see the amount of confluence that we had for bearish action at the open. We had 1, the forward fair value gap to be filled. We had 2, the 12 o'clock open to be traded to. We have 3, we had the 7 o'clock to 8:30 lows to be taken. And 4, we had the gap to be filled. The gap to be filled. So all these were confluences that price would move bearish this morning. It could have traded up again to take the high and then plunge down. But guys, the trade for the short side without confirmation would have been here. After price traded down below this small breaker here, we have high, low, higher high. Price break below this breaker here. This breaker here, the last down close candle before the up move. Price closed below here, and what it did, come back and hit it right here. This would have been the short. This would have been the short right here. Stops right here above these highs. Stops above these highs. First partial would have been here, the lows, the marked out lows, and then we'd have held the rest or we'd have taken a partial here again at the 12 o'clock open, and we would have held the rest for the 4-hour gap fill. That would have been a total of 1 to 5 risk to reward ratio. But the trade with confirmation would have been this trade. After we traded down for the morning, we would have wanted to see price move to a discount of the range. Let's go. So we have the both chart side to side. We have NQ on my left, NQ on my left, ES on my right. So guys, this is the starting of the move for the morning. This is where price started retracing. So my trade would have been, because we didn't trade right down to the forward fair value gap, so my trade would have been to see price retrace the discount of the range, which is 50% and above. That would have been discount of the range, and price started retracing at 9:52. Price started retracing. What I want to see price to do is to return to discount. You don't have to be returning to you don't have to trade to discount on both of the pairs. If we do it on either one and we have a displacement with a SMT, that is my trade. So ES was the weaker pair from morning. because as you can see, we have SMT at the lows, NQ making a higher high, ES making a lower low. We have NQ making a higher high here, ES making a lower low. Why didn't I take this shot right here? Because why? Price didn't trade to discount of the range. When we were here, you can see price hitting the discount, the 50% on the fib right here. We have price hitting the 50% of the fib right here. We hit it right here again. That's where we hit the 50% of the range of the morning session from 9:30. Trade down, traded to 50% of the range. And why we trade to the 50% of the range, we were about that area on ES. We made SMT at that moment when price hit discount of the range, 50% of the range, with ES, with NQ making this high and making a higher high, and ES making this low and a lower low. So after we made that ES, I want to see displacement. I want to see displacement, which we got here. I wanted to see displacement, which we got here with a fair value gap. So after we made that SMT and hit discount of the range, we had that break with a market structure shift right here. Taking these lows, market structure shift, FVG. That was my entry. I took it on paper this morning because, guys, nobody trades before. Nobody traded the day before NFP. And before I used to trade, but I'm trying to follow my rules, and I'm trying to conserve my capital, trade on the best. They give myself a best chance to get a payout. Yes, this trade would have won, but on many days it would have been choppy and price, and probably I would have lost. Maybe on a scale of 1 to 10, maybe I would have lost about 7 out of 10 of this trade on the day before NFP. But today we had good price action, but I took it on paper today. So after we made the SMT with NQ hitting discount of the range, and we had the 4 hour FVG to be traded to, we had this displacement with a FVG. When price came up, as you can see, I took 4 contracts right here. 4 contracts. Wise price hit this FVG with my stops placed above the highs, and I targeted. My target was a 1 to 2 RR, a 1 to 2 risk reward. So as price hit, it came down into this 4 hour FVG on ES because ES was weaker. So I was looking for ES to trade deeper into this. It's 4 hour FVG on NQ. We came into it right here. So a 1 to 2 RR was hit on ES. I made $200 and something with that 4 contracts. So guys, after we hit the 4 hour FVG, we got displacement out of this range. As I told you guys, I was not looking for price to trade to the breakaway gap on the 4 hour chart. And again, what I forget to show you guys, we had the same thing happening on the lower time frame. As I tell you, this is fractal. It happened on all time frame. So after we had the breaker on the 5-minute time frame, and what that gave me more confidence in taking the shot down to the breakaway, down to the 4 hour FVG. On the 5-minute, we had this breaker, we had this high, this low, this higher high, and we broke down, leaving 2 FVG stack on top of each other in the direction of my bias. Remember, you have to have a bias. So my bias was price trading down to the 4 hour FVG. So we had this breaker. So we had this 5 minutes FVG, and we have this, which I would have labeled as a breakaway gap. So I was not looking for price to trade to the higher portion of this FVG. So this was about discount of the range. When price traded to this first FVG, I was looking for it to trade down to the 4-hour FVG. So all this was an X confluence that price would have gone to test the 4-hour FVG. So let's go back to the chart. So after price traded down to the 4-hour FVG, we had a immediate displacement up. Because price is bullish on the higher time frame, we had an immediate displacement up. So when I saw this displacement up out of the 4-hour FVG, remember this is the 4-hour FVG with the other FVG stack on top, which is a breakaway gap. We were not looking for price to be to trade towards it. Well, if it price trade to it, we are not looking price to completely fill this FVG. On a good day, price would not even trade to this FVG. If it do trade to this FVG, I was looking for price to trade to the upper portion and give me some kind of reversal pattern. So here we got our reversal pattern after price traded to the first FVG 4-hour on the 4-hour time frame, giving us a displacement up with a market structure shift. And here we had a small breaker with the low, high, lower low, and then we displaced up FVG. There I took 4 contract on NQ this time because NQ was the stronger pair. So after price hit here, I was looking for price to move up to the 12 o'clock open, where I would have taken a partial on the 12 o'clock open, but price came up, went back down, came up, and then made a sudden dump before displacing up. So when price came into this FVG, I took 1 contract. We had a change in state here. Price tested this other block right here, and the change in state of delivery happened. I took the 4 contract. Price traded up, came back down, traded up. When we had this price trade over this high, I ended up bringing my stop to break even, which was under this other block right here. So I thought that price would have protected. Price would have been protected because we had this other block here, we had these other block here, and we had this fair value gap right here. So I placed myself right under this low, not knowing that price would have come back down here, made SMT with ES once more inside of this 4-hour FVG, and then started displacing up. It was a little choppy, but price did deliver back to 50% of the range, which I'll have taken a next partial here above these highs. As you can see, price continue way up further than 50% of the range. So right is there. Here is price right now. So price move up, right up, and now we are moving back down. So guys, this was the trade breakdown. This was the market breakdown for today. If you find any value in this video, please like, comment, share, support my video in any way that you can. Drop a like, drop a comment, share my video to your social media. Give me a thumbs up on the video. Be sure to subscribe. It will help me a lot. Peace out.